housing market. We are finally getting February data, and it is so interesting. First and foremost, I am happy to report that the crash bros are right. Existing home sales, median home price has finally gone negative. After 121 months of positive numbers, the crash bros have successfully called the housing crash in February of 2023. We are down, hold your seats, we are down nationally. This is national median home price. A whopping, a catastrophic 0.2%. Yes, folks, we are down 0.2% for the year-on-year comparison. I want you to remember that in very early January, I indicated that this year we will have 4 months of negative year-on-year numbers. We have to pay the price of the stupidity from February, March, April, and May of 2022. Go back and look at the charts. That is where we went parabolic with inventory at ridiculously and unhealthy rates. There will be, I want to be clear, and if you want, you can go back and look on my playlist or my channel. I did 12 housing predictions for 2023. This is not a flip-flop. I told you this was coming. We will have 4 negative year-on-year months, but it is my expectation that December of 2023 to December of 2022 will be positive. So there you have it, folks. They're right. Negative point, not 2%, negative 0.2%. Of course, something else to remember. About a year ago, we had a conversation or several conversations about the word median. Median is not average. Median is the middle. So when you have a distorted housing market and the luxury market is down 45%, that is less transactions. So if you take out the high-end transactions, the median moves. If eventually the market turns around, luxury moves up, and we have no inventory on the low end, it goes up. That is what I believe is transpiring. Lots of folks think median is average, and it is clearly not, and people will see that. So again, prices down, they are negative 0.2%. We will do some more deep dives on other states here in a moment. So I want to be clear, they were right. Next, transactions. So again, remember we did 4 million transactions last month. We did 4.02 million the month before. I called the bottom at 4,020,000 transactions. I was off by 20,000. That's less than 0.5%. The transaction total for February was expected to be 4.2. I told you on Saturday I expected a massive beat, but the beat was even more than I expected. I did not expect a 14.5% beat. I kind of capped out at 10%. So the transaction beat in February for existing home sales even shocked me. It came in at 14.58 million. Think about that. But here, those numbers are great, the percentages are great, but Michael, what does it mean? Well, I think we once again have learned, or maybe had validation, that rates in the low 6s, or heaven forbid, below 6 matter. Remember, we had that little window in January where they were coming down, and that little wiggle in early February where we hit 5.99. Interest rates matter. So we need to watch that. As rates come down, get to 6.25, 6, or heaven forbid, high 5s, we now know, without question, that attracts the marginal buyer. Real estate is always about the margins. As we have learned, in the worst of times, there's about 4 million transactions that happen. Could it be 3.8? Sure. Could it be 4.1? Sure. but we're playing at the margin. So as rates come down, we now know and have had revalidation that 6% owner-occ is the magic number. That brings people out in droves. We need to watch that because the inventory is not coming. So we'll talk about that more later. So again, some of the numbers that came out, again, you can go get this at National Association of Realtors. It's nar.org. Go get this. All the data just came out. Again, prices down 0.2%. The number is 363. Hey, Evo, thank you for the, I guess that's called a super chat. I appreciate you. Much appreciated. Again, luxury down 45%, which is why the median can move. Again, median is the middle, not average. Median is the middle. Multiple offers are back on affordable homes. Folks, what have I been screaming? The housing market is broken. We have a white-hot activity, first-time home buyer, entry level. Luxury is broken. The numbers are playing out. Multiple offers are back. It is estimated that 28% of transactions in February were all cash. It is estimated that the most hard-hit market, meaning the fall in transactions, was over 1 million. If you have a house listed over 1 million, I would call that luxury in at least most of the country. That was down the most. Another thing I got from Lance Lambert, he's our Thursday expert from Fortune, a great follow on Twitter. It's News Lambert. 133 out of 267 markets saw a price decline in February. Again, median home price decline year on year in February. That's almost exactly 50-50. Again, I talk median. I battle all the crash bros all the time at the median national. None of that should matter to any of you. You need to look at your buy box in your market. You need to learn your average yield. I would argue that every market has a entry level, move up in luxury. It is not all the same. I suspect every city, I suspect most cities, I want to give myself a little wiggle. Most cities are hot entry level. You guys are telling me this. You're telling me about multiple offers, offer review dates, lines out the door. And then luxury, crickets. So when somebody says housing market Cleveland, it's not one market. It's housing market Cleveland affordable, on fire. Housing market Cleveland luxury, crickets. So please do your own research. That is the biggest problem I have with Crash Bros, is they are giving people permission to sit on their ass and do nothing. I have no problem with somebody who does the work and decides not to buy. That is an educated and an informed decision. All I want you to do is do the work. Don't assume somebody talking in their mom's basement has your best interest in mind. Never assume that. Do your work for your family. All right, so that is existing home sales. Again, transactions last month, 4 million. Expectations 4.2. I thought 4.35. They came in at 4.5 million. That is a huge beat. And yes, we have our first negative month of 4, down 0.2%. So let's talk about Amazon. Well, Amazon has announced round dose of layoffs. Yes, folks, this time at Amazon, they have announced 9,000 cuts or layoffs coming. As I've unfortunately told you multiple times, these large tech companies never cut fast enough, never cut deep enough. I am on record with, unfortunately, delivering bad news. Many of these tech companies may have 3, or the big ones, and Amazon might be in this camp, might have 4. They are not right-sized. They are simply not right-sized. So again, get close to revenue. All of those things that we've talked about, getting prepared for what is coming. So again, Amazon round 2. I think Meta had round 2. More round 2s are coming. As somebody who had to sit in a boardroom all by themselves with a spreadsheet when the world was ending after the dot-com crisis, in the Great Recession, some of the worst days of my life, having to make those decisions. And trust me, I understand. That's why I can confidently say more rounds are coming, because you don't want to cut deep, but you should. You have to. It's tough. Now let's talk about Virgin Orbit. This may be a company you have never heard of. Virgin Orbit, in my opinion, is a sign of what is coming to a lot of tech companies, early IPO companies going forward. They're out of money. More importantly, they cannot raise more capital. So I believe it was last week, it might be the week before, they furloughed most of the company. They furloughed them because they hoped in a last-ditch effort they would be able to raise money. Folks, that window is closed for unprofitable companies. We are going to see one of the outcomes of the banking crisis, the regional banking crisis, is you are going to see less funding of unprofitable zombie tech and companies. And the ripple effects of that will mean layoffs, bankruptcy, sold for pennies. Now, I expect most of this to start occurring in Q4. I believe most companies have a burn rate or a run rate that will get them to Q4, and then things will start breaking in Q4 through the first 3 quarters of 2024. Virgin Orbit is just the most recent and a clear example of what I think is coming. They're unprofitable, high burn, can't raise capital. Out. Unfortunately, that's coming. Those 750 employees. Again, this is what are they do rockets, right? Yeah, they're a rocket builder. So I expect, PhDs and all of those, they'll just go somewhere else. But again, this is what's coming to a lot of unprofitable tech who relied on the debt market and 0 interest rates to survive. Party's over. Redfin. So we got some data about the housing market. People ask about California. So this came from Redfin. Redfin says California housing market in February down, negative 6.5% year on year. Can you believe the median home price in California? $706. Yeah, $706. Transactions down 33.4%. Days on market up from 25 to 49. Auburn, California came in at the hottest appreciation at 24.9% year on year. Active listings right now down 2.7% year on year. New listings down 38%, down 37.9%. Pretty crazy. So let's talk about Zillow. Again, a lot of data is coming out about February. February is a very interesting month because we had the rates drop in the second half of January, bottom in early February, so lots of great data coming out. Zillow, home prices decline in February. They were up 4.4% year on year, down 4% from the peak. Ooh, I might sneeze. Fewer listings. Listings are down 22%. Sorry, trying to fight off a sneeze. And they are down 31% from 2020. So again, the housing market is broken. Lots of activity on the low end. Luxury is slow. Really all this stuff that we've been talking about, but now it is showing up in the data. More and more people are going to finally realize, you know what? Luxury is broken, down 45%. Entry level is hot. Lines out the door. Multiple offers. It's what you and I have been talking about for months. People are starting to see it. Lastly, in Sacramento, there's another great follow on Twitter. If you're not following him, I highly recommend it. Sacramento Appraiser, Ryan Lundquist, Sacramento Appraiser. In the month of March, this is very recent data. In the month of March, 26% of all pending contracts went into contract within 5 days of listing. 50% of pending transactions went into contract in 14 days. And again, if you follow me on Twitter, again, one rental at a time, I responded to Ryan saying, please update this search based on 500K because I think it would be eye-opening. My hope is Ryan takes on the challenge and publishes the data because, again, why is that important? Well, in Sacramento, 500 is the rough middle. So if Ryan was going to say, hey, what's going on in entry level versus what is going on in luxury, I think that would be even more eye-opening. I suspect inventory on the low end is flying off the shelf, distorting the numbers, and I expect above the median is slowing down and, again, distorting the numbers another way. We don't have one market, not even in Sacramento. Sacramento, at a minimum, very simplistically, has below the median and above the median. Again, we have to be careful. All of these folks, again, Ryan is amazing. The data that he puts out is amazing. But we have to remember, today is fundamentally different. Below the median is hot, luxury is not. Let's talk about Elon Musk first. Elon Musk out yesterday calling for a 50 basis point cut. Hey, Tom, thank you for the super chat, man. I appreciate you. Much appreciated. Oh, $5. Wow. Thank you, buddy. Musk is calling for a 50 basis point cut tomorrow. What do you think would happen if we had a 50 basis point cut tomorrow? I'm just asking. You and I talk every day. What do you think happens if the Fed goes, holy shit, the world's on fire, we have to cut 50 basis point? What happens? You tell me in the comments, because hopefully I don't even have to tell you what comes. But again, leave comments below. What happens if we get a 50 basis point cut tomorrow? I will look at your replies and maybe I'll reply to this tomorrow. But again, let me know what happens. Second, what did I tell you happened Saturday after Silicon Valley Bank? It might have been Sunday. I came to you right from this office and I told you something changed. I believed and said and have the receipts that the consumer is broken. The psychology. The U.S. economy is built on the back of consumers. And when the consumer gets scared, they retreat. Even if it is illogical, we retreat. We are now starting to see some very early data. What did I find? Just this morning, I believe I saw this on Twitter. I should have wrote down the page. I didn't write it down, my mistake. I will try to give credit more often. I did not write it down, that is my mistake. But I move on. New auto inventory rose 49% since last January. Current days of supply in new cars is 41. That is up 50%. What is one area that would change almost overnight if the consumer was truly broken? Car purchases. Again, we will see more of this. We've already seen, oh, get this one. This one. Oh my God, this one. This number. This number is frightening and exactly what I expected. So remember, over the last couple of days, I've told you I am so excited to learn about the savings rate. Remember the savings rate being down at low levels? I have told you that number has never been more wrong because people are moving to gold, Bitcoin, treasuries. So it doesn't include the liquidity out there. I indicated, again, that the psychology is broken. People are now taking their money out of banks, holding it in cash. They're buying physical gold. They're buying Bitcoin. They're buying treasuries. They're buying money markets. The banks are losing liquidity. I keep screaming this. So we've got our first number from last week. This number has been tracked for decades. So when I say last week was the 5th largest on record, it means something. Last week, $108 billion flew out of banks into money markets and treasuries and other assets. That money flow is the 5th largest on record. Folks, that is liquidity draining the system. Remember over the weekend when Dan Bird told us about fractional reserve lending, right? I put in $1,000. They hold 100. They lend 900. Then that 900, then it becomes this, then it becomes that. It very quickly builds because of fractional reserve lending. But what happens if I go to the bank and take out my $1,000? That is exactly what happened to Silicon Valley Bank. And when that number gets too large, they are not solvent. Poof. Poof. So again, the FDIC, the Fed, the President of the United States is hoping, is battling, is fighting to build confidence in the consumers. Folks, it is broken. And as I said earlier, when the consumer is fearful, they do irrational things. Folks, if you have $7,000 in an FDIC insured bank, there is no reason to take that $7,000 out and bury it under your mattress. Absolutely nothing. But that is what is happening. Crazy. Then let's talk about the 10-year. I will admit, again, I love being wrong. I take my shots, and when I'm wrong, I own them. I think it was 3 or 4 days ago, I put out a prediction that I thought the 30-year mortgage rate would be sub 6% by April 15th. I am holding to that prediction. I will admit, because a lot of you like to see me admit when I'm wrong, I will admit the 10-year over the last 2 days is not behaving. The 10-year is up. I think the 10-year bottomed at like 3.38. I think it's up to like 3.57 this morning. So we are still seeing wild gyrations in the lending market. I think the mortgage rate yesterday was about 6.67. I think it bottomed at 6.4. So it's not going my way currently, but I'm not changing my opinion. But again, you take a shot, you put it out there, you should be an adult and own it versus deleting your videos. And you know who I'm talking about, people who delete their videos. So what else do we have? Looks like the LA school system is shut down. They are on strike. LA school system, I think, is the second largest school system. They are on strike. They are on a 3-day strike. They are looking for a 30% raise. It looks like the support staff in LA school system makes about $25,000 a year. That is horrendous. That is unacceptable. That is below the poverty line. They deserve a raise. I got to tell you, if that number is right, what are they thinking? These people take care of our kids, and it's a shockingly low number. $25,000 in LA County? Are you freaking kidding me? Not okay. 10-year I wrote it down. It's up to 3.56. Oil kind of gyrating between 68 and 69. Gold touched 2K down to 1966. So we're seeing a lot of movement right now. Bitcoin, though, if you happen to be a Bitcoin investor, congratulations. It looks like it touched 28,000 this morning. Anything else I want to hit? One sec. Oh, First Republic. First Republic is very interesting. David Faber. David Faber is a CNBC, host. And he said yesterday something that shocked me. It is estimated that First Republic might have a $25 billion hole in their balance sheet. First off, that number should shock you. It shocked me. But now let's talk about how do you fill the hole. Well, you already had big banks give you $30 billion, but that was a 100-day loan that they owe interest on. So at this point, they can do a couple of things. Even if it's not $25 billion, even if it's $15 billion, there is a hole to be filled. So it appears JP Morgan, I think it is, JP Morgan is advising First Republic. One outcome could be a share sale, right? They've already canceled the dividend. They are roughly, I think, a $3 billion, maybe a $3.5 billion market cap. So if they have to sell $15 billion in new shares, I would call that highly dilutive. Another option is they could do a bond, but then again, a bond they have to pay interest on. Or, folks, they're just going to give up and have to get acquired. I don't think the FDIC will let them go bust. I think they will force a shotgun marriage, just like UBS and Credit Suisse. UBS, in my opinion, did not want to buy Credit Suisse. They were strong-armed. They were forced. It is a marriage of convenience. I suspect First Republic may have to go that way if they can't fill that via an equity round or a share sale, which maybe they can. They have a great reputation. They're pretty well known. Maybe there's 15 or 25 or whatever the number is out there. I don't know. That's enough. That's what I got for you today. An amazing day. Again, existing home sales shockingly high, 4.5 million. But let's congratulate some people. Folks, there are people doing the work. There are people getting great deals. Let's congratulate Dion for getting your first deal. These are golden tickets. If you ever get your first deal in one rental at a time helped you, let me know. I will send you a golden ticket. Congratulations. Chris, congratulations on your next deal. While you can only ever get one of these, you can get lots of these. Some people have collected 10 or 15. So keep doing great deals only, and then let me know. So Chris, congratulations. And then Annex, congratulations for getting your next deal. Cards will go out in the mail here this afternoon. Congratulations, everybody. Keep doing the work. Keep being positive. No gambling, no risk taking. Don't trust anybody on YouTube or the internet. Do your own work in your own buy box. Bye-bye.